It's Friday the 9th of October, 7:30. The market opens in half an hour. I'm on the FTSE 5 minute chart and I'm going to do the live trade. The live trade today is going to be at the open or just after the open. There's basically two trades setting up that I will take depending on how the market reacts. If the market before 8 o'clock can fall back down below this level here at 4:30, then I will short the market looking for 15 to 20 points at the open. However, if the market open at 8 o'clock, it's still above this area and the candle can push higher than these cash highs right here, then I will look to go long the market after the close of the first 5 minute candle. I'm going to talk you through the reasons for this trade after I take the entry and after the trade completes, but that is going to be the live trade today. Okay, so the market is now open. We are short the market because it opened underneath this 4:30 zone. I'm only looking for 15-20 points out of this. The open of the FTSE is often very, very volatile, jumps around a lot, so you have to be quite careful and you have to manage the trade quite closely. I'm going to take you through the reasons for the trade after the trade either completes or stops me out. But for now, I'm just going to let the trade run and we will see what happens. Now, the market may find support here. Also down here at this very large tail, and this is the lows of the trading pre-market this morning. So I'm going to watch it. I'm going to manage it quite tightly, just because when the market moves against you at the open, it can just rocket higher. It's as well as the normal professional traders that trade full-time, banks, institutions. There are also a lot of retail traders that trade first thing in the morning. Before work, they enter orders. They all execute as the market opens, or the people wait till the market opens and then they click to enter. So there's a lot of orders going through the market, which makes it move very quickly. So it's just starting to fall down now. I'm looking for it to fall down 15 to 20 points. To be honest, it probably will fall lower if it does go down that far, and I may actually just close out 75% of the position. I'm just going to watch it. I'm going to see how it reacts and then I will decide. I'm going to pause the video and I will come back if it starts to move down or if it starts to bounce higher. Okay, so we can see that the market has reacted to the first zone that I highlighted. I'm not going to exit after this one because I am still expecting the market to come down. However, it is always good to be aware of where you are going to get support or resistance, just so when the market starts doing things like this, you know what's happening. Okay, so the market is falling down now. It's broken through this zone right here. Now that it has broken this zone, I don't really want it to close back above it. So this 5 minute candle, I want to close below this first zone at least. I don't mind if it reacts to the second zone and closes on it or above it. It's just normal for support and resistance. It's not always the first candle that breaks through support and resistance. This was the important zone for me first. Now that it has broken it, I'm confident that it will go down to the 20 points. You can see I've taken off the limit order down here, and when it gets down to 20, if it gets down to 20, I'm going to close out 75% of the position and let the rest of the position run. Okay, so the market is just starting to fall away. You can see it sort of bounced in between these two zones here. What's important to note here is, if we look at a few of these candles, this one, not this one, sorry, this one, and this one. Now, it's easy to look at this chart and say those are not significant candles and it's okay to let the position run. However, when these candles are forming, they look incredibly bullish. And you've got to realize that this candle here, it was a complete green candle all the way up to here. It was a very bullish looking candle. This is why it's important not to exit a position as candles are forming. I always wait until the candle completes before I make a decision. Now, that isn't to say that I would let this candle, say it was an incredibly bullish candle and it was a 30-40 point candle. That's not to say I would let that candle run for 30-40 points. When the market got down here, my mental stop was already at break even. So if any of these candles had come up to break even, I would have just closed the position. The reason it's a mental stop rather than bringing my actual stop to break even is because if I have my stop at break even, the market will trigger me out of a trade 1 or 2 points before break even. That's just because of the spread. I like to exit actually at break even, so I just exit the position manually if it gets there. We're showing a lot more resistance to going down here than I was expecting, so I am going to close this position at 20 points, the full position. I'm not going to let the 25% run. I changed my mind. It's absolutely fine to do that. I'm going to talk you over why I did that when the position finishes, and also why I took the trade. Okay, the position's just at 20 points now. It's just sitting on R1. I am going to close the position on this candle. So I'm at 21 points. That is the position closed. Now, what I'm going to do is I'm going to talk you through, first of all, why I changed my mind about letting the profits run. Basically because if we scroll out here, we can see that we have a significant area of support here. The market has rallied up here and then it has dropped off very significantly. You can see how close it is to where the position is now. And for me, there's no point in letting the position run down there and turn against me. It might still go down. It doesn't matter to me. That's me got my 20 points. Now, the reason I took this position, first of all, we have 6430 as a key daily level that I'd already identified. This morning, that tied up with R2, the pivot level. Now, if we go on to the daily time frame and look at this 6430 area, so the market has pushed, made a very strong bullish run all the way up here to 6430. It closed there last night and it opened this morning slightly above it. Now, although this looks very positive, and it is very positive, the market came right up to these areas here this morning. This is where, during all the Greek drama, all the Greek news, where it wasn't clear if they were going to default or not, the market gapped down here, pushed up, and then gapped down here. So this was a fairly significant area of resistance. So with the market opening there, if it couldn't push above the 6430 levels, I was expecting a sell-off. And that is exactly what I got. I got the 20 points, very nice. If it had, however, broken above here at the open and remained above here, I would have looked to take the market up into these levels right here. So a very nice trade, completed relatively quickly. It's 8:52. I'm looking for another 15 points for the day, and that's me finished. If you are interested in learning exactly how I trade the 5-minute time frame, it's the exact same across Forex pairs and indexes. I'll leave the site address in the description section of the video. It's decisivetrading.usefedora.com. And also, if you are learning how to trade, please do subscribe to Decisive Trading. It's absolutely free, and I try and post at least 2 training videos